Have you ever wondered how leverage and margin trading work in stocks and cryptos? If you have, you're in the right place. Today we're going to peel back the layers on these advanced trading techniques that can potentially amplify your profits. But remember, with great potential comes greater risk. So, what are leverage and margin trading? They're essentially financial tools that allow you to amplify your trading power. Imagine you're at a carnival, and you want to try your hand at the high striker game. You know, the one where you use a hammer to hit a lever, sending a puck soaring up to ring a bell. Now imagine if you could use a hammer 10 times heavier. You'd ring that bell every time, right? That's leverage. It multiplies your strength, or in trading terms, your investment. Now, let's talk about margin. Picture this. You're at the same carnival, but this time, you've run out of tickets. A kind stranger offers to lend you some of their tickets with the understanding that you'll pay them back later. That's margin. It's borrowed capital that allows you to play the game even when your resources are tapped out. But here's the catch. Both leverage and margin trading can work both ways. Just as they can boost your profits, they can also magnify your losses. So if you're considering using these tools, it's crucial to understand the risks involved. Also, it's important to note that this video is not financial advice. We're here to provide information, but it's essential that you do your own research and consult with a professional before making any investment decisions. Now that we've set the stage, let's delve into how these concepts apply to stocks and cryptos respectively. We'll start with a look at how leverage and margin trading work in the stock market, and then we'll jump into the world of cryptocurrencies. So, buckle up and get ready for an exciting journey into the realm of advanced trading techniques. So, how does leverage and margin trading work in the world of stocks? Well, let's start with the basics. Buying on margin in the stock market is a strategy where you borrow money from your broker to purchase more shares than you could with your own capital alone. It's like having a superpower that allows you to control more assets than you actually own. Now you might be thinking, that sounds great. More shares, more profit, right? Well, yes and no. Leverage does indeed have the potential to increase your profits. Think of it this way. If you have $100 and you borrow another $100, you now have $200 to invest. If the stock you purchase with that money increases by 10%, you've made a $20 profit instead of just 10. That's the power of leverage. But with great power comes great responsibility. And in this case, that responsibility is risk. The same leverage that can amplify your profits can also amplify your losses. If the stock price falls, you could lose more than your initial investment. And then there's the dreaded margin call. This is when the value of your investment falls below a certain level, and your broker demands that you deposit more money to cover the loss. If you can't meet the margin call, the broker has the right to sell your investments, potentially at a loss, and you could end up owing money. Remember, we're not financial advisors, so you need to do your own research. Leverage and margin trading aren't for everyone. It's important to understand the risks involved and to only invest money that you can afford to lose. So, that's how leverage and margin trading function in the stock market, but what about cryptos? Let's find out. Now, let's turn our attention to the world of cryptocurrencies. How does leverage and margin trading work here? Much like the stock market, margin trading in the crypto world allows traders to amplify their buying power by borrowing funds. This practice can significantly increase your potential returns. However, it's crucial to note that the risks are equally amplified. So, how does it work? Imagine you're a crypto trader with $100 in your account. You decide to use leverage of 10 to 1. This means you can now trade with $1,000 instead of your initial $100. Not too shabby, right? Now if the value of your chosen cryptocurrency increases by 10%, your profit isn't just $10 anymore. Thanks to leverage, your profit skyrockets to $100. That's a 100% return on your original investment. Sounds like a dream come true, doesn't it? But hold your horses. Remember, with great power comes great responsibility. The crypto market is notorious for its volatility. Prices can swing wildly in a matter of minutes. So, while you could double your money in an instant, you could also lose it all just as quickly. If the value of your cryptocurrency falls by 10%, you don't just lose $10. Your losses would be $100, wiping out your entire initial investment. Here's where margin calls come into play. If your account balance falls below a certain threshold, the lender may demand that you deposit more funds. If you can't meet the margin call, your position could be liquidated to cover the losses. It's also worth noting that, unlike traditional stock markets, crypto markets operate 24 hours a day, 7 days a week. This means the market could move against you while you're sound asleep. As you can see, while the basic principle of leverage and margin trading remains the same, the application and risks can vary greatly between stocks and cryptos. So, as always, remember to do your own research and never invest more than you're willing to lose. After all, in the world of crypto trading, fortune favors the brave, but it also respects the cautious. Now that we've looked at both, let's compare and contrast these two different applications of leverage and margin trading. First, let's talk similarities. Both stocks and cryptos allow for leverage and margin trading, empowering investors to amplify their potential profits using borrowed funds. This is a double-edged sword, however, as losses can also be magnified if the market swings the other way. In both realms, it's crucial to have a solid understanding of the market, the asset, and the potential risks before diving in. Now, on to the differences. The stock market has been around for centuries and is heavily regulated. This regulation adds a layer of security for investors, but can also limit the amount of leverage available. Crypto, on the other hand, is still relatively new and largely unregulated. This can lead to higher potential profits, but also higher volatility and risk. In terms of volatility, cryptos generally have a much higher level of volatility compared to stocks. This can mean larger swings in value, which can be a boon or a bane for leverage and margin traders. On the flip side, stocks tend to have a more stable and predictable pattern of growth and loss, which can be a safer bet for those who prefer a more steady approach. Another key difference lies in market hours. The stock market operates during set hours, typically Monday through Friday, 9:30 a.m. to 4 p.m. Eastern Time. Crypto markets, however, operate 24/7, allowing for round-the-clock trading. This gives crypto traders the advantage of being able to react to market changes at any time, but can also make it a more demanding and stressful endeavor. Whether you choose to leverage and margin trade in stocks or cryptos, it's vital to understand the potential rewards and risks. Also, if you like this content, be sure to like, comment, and subscribe. It really helps the channel out. We've covered a lot of ground today, exploring the complex world of leverage and margin trading in both stocks and cryptos. We delved into the intricacies of these two markets, highlighting the unique attributes that make each one a worthy consideration for your investment journey. In the realm of stocks, we've seen how leverage and margin trading can amplify your gains, allowing you to control larger positions with a smaller outlay. These strategies, however, come with the potential for increased losses, necessitating a strategic and informed approach to risk management. Turning our attention to cryptos, we've explored the high volatility and potential for astronomical returns that characterize this market. We've also touched on the inherent risks, including the potential for significant losses, the prevalence of market manipulation, and the lack of regulation. In comparing and contrasting these markets, we've underscored the importance of understanding the unique dynamics of each before making your investment decisions. While both offer the potential for significant gains, they also carry their own set of risks and challenges. Your success in navigating these markets will largely hinge on your ability to align your investment strategy with your risk tolerance and financial goals. Remember though, we're not financial advisors. The information shared in this video is intended to provide a broad overview of leverage and margin trading in stocks and cryptos. It's crucial that you conduct your own research, seek professional advice, and consider your unique financial circumstances before engaging in these forms of trading. We hope this exploration has given you a clearer understanding of these complex markets, equipping you with the knowledge to make more informed investment decisions. Do you know of any additional information you would like to share? If so, put them in the comments section below. Thanks for watching. Be sure to like, comment, and subscribe, and hit the bell notification so you'll get updates anytime we upload a new video.